We are looking at SPY daily where it has 90 days of low and then last 4 months it's going up. Even though we see an indicator here, we don't need an indicator. This I have created for easy understanding, but you don't need this. You can calculate your own self. This is a last month high, this is last month low, this is a last month middle. So every month we have high, low, middle. So we repeat every month, find the high, low, and calculate the middle. From the middle, we find 1.5% above the middle, one line, 1.5% below the middle, one line. So you have 1, 2, 3, 4, 5 lines. Even though we have several lines, only thing we need is 1.5 below the middle line, 1.5 percentage above the middle line. Those are the two important lines. We have made yellow color on them. How do we trade? Every time price closes above the 1.5%, the next day we buy here. Similarly, every time price closes below the 1.5% of the monthly middle, we sell it. So you can see this, here we sold it, there is no buy signal next 90 days. We got a signal here. From here to here, we would have made 10%. In case we need to sell here, we'd have made anywhere from 8 to 9%. Let's look at the other ETF. This is a DIA daily ETF. We have a similar to SPY pattern. We had a buy signal here. We did not get the sell signal yet. So, however, it looks like we had a very good trend here by looking at the gaps, and this has been reduced. This has been reduced further. So there is a chance either this month or next month it can cross down. So DIA is very volatile indicator. It could have made more money than the SPY. Let's look at some individual stocks. This is AMD daily chart. If we had got here and we have sold here, we might have lost 5%. So I don't encourage buying in the middle of the quarter or right before the earnings. That is not a real trend. Right after the earnings, we got a buy signal here. We could have brought there, and this is the sell stop, which is 1.5% below the middle line. So we see that we had 60% run in one quarter of AMD. So for individual stocks, I would recommend buying after the earnings rather than the middle of the quarter. For ETFs, even though I recommend 1.5%, you can also experiment with 1%. For me, 1.5% looks more appropriate. For individual stocks, which are very volatile, like beta more than 1.5%, you can go with 2% also, because you're risking 5 to 8% to make 20 to 30% on the high beta stocks. We are looking at Tesla with 1.5% buy sell range. We can see that we got a buy signal here and then sell signal here. We have not made much money. However, if you sell here at 5%, we'd have made money. That's not the strategy. So it's mostly break even here. As I told you, this quarter we are already below the middle line. So we can avoid buying here in the middle of the quarter, wait for the earnings. Here we had after earnings up, and here we had sell signal. This is also almost break even. So essentially last 6 months on the Tesla, we haven't made any money with this strategy, and we haven't lost also. So not bad. We are looking at Amazon. We got a buy signal here, no sell signal here, but next month we had a sell signal. We would have lost around 10% here, and then next 2 months we see the down. Right after the earnings, we got a buy signal here, and then sell signal here. It's a kind of 5% profit, and again we have a buy signal here, and then we didn't have the sell signal yet. We would have made another 10% so far. We are looking at Nvidia, which is a trending stock of 2024. We can see right after earnings we had a buy signal. However, we end up with loss. Maybe this is 10% loss. We don't buy here. As I said, we should wait until the next earnings for individual stocks. Right after earnings, we had a buy signal here. We could have brought here or here, but it did not go below the stop loss. The beta of Nvidia is more than 1.5. I can go with 2% instead of 1.5% on these kind of stocks. So this rally continued for 60% gain. So we still don't have sell signal. This is the one. We have one here, another here. It depends on how it reacts right after earnings. That's all we have. Let's look at the strategy one more time. Let's look at the setup. Identify middle of the last month range. Buy above 1.5% from the middle. Stop loss is 1.5% below the middle. Works best for ETFs. For stocks, beta greater than 1.5, we can use 2% from middle. And also for the stocks, it's better to trade right after the earnings rather than in the middle of the quarter. This strategy works for trending stocks. So this is a momentum strategy. Not so good for sideways market. We may lose the sideways market, so better target the trending stocks which are near 52 weeks high, which can go higher again. That's all for today. Talk to you later. Until then, happy trading.